Hey everyone, I'm attorney Andrew Bethel, and today we're taking a deep dive into something that's already got clients calling, CPAs scrambling, and that already sort of invalidated one of my prior videos. It's called the Big Beautiful Bill, or really formally, the One Big Beautiful Bill, now signed into law by President Trump on July 4th. And despite the absolute cringe that is the name, this thing is not light reading. At over 900 pages, it's a bit of a Frankenstein of tax provisions, social policy shifts, and what I can only assume were some very tired congressional interns. Now, I'm not here to debate the politics behind it. What I am here to do is explain what this bill means for your estate plan, whether you're already working with an advisor or just getting started. So, if you've got wealth to protect, assets to pass on, or a sneaking suspicion that Congress is about to make your life more complicated, you're right. So hit the like button and subscribe to learn more. Let's get into it. Let's start with the biggest and most obvious update. The BBB makes the federal estate and gift tax exemptions permanent at $15 million per person, which is $30 million for married couples. And yes, it's indexed to inflation going forward. As a reminder, the estate tax is a tax paid by your estate after you die if the value of your estate exceeds the threshold, which is $13.99 million this year, and again, $15 million next year. That means, in theory, only the top 0.25% of US households will owe an estate tax under the current law. So if you're sitting under that threshold, like most of us regular folks, you might be thinking, great, I don't need an estate plan anymore. And you'd be wrong. Just because the exemption is high today doesn't mean it will stay that way. And even more importantly, there's a real possibility this gets clawed back in future administrations. If this bill doesn't generate the economic growth and promises and deficits balloon, then wealth taxes, estate tax reductions, and more aggressive audit strategies are all back on the table. So the message is clear. Take advantage of the high exemption now while it's locked in. Also, this isn't even diving into how the state is going to try to claw some of that wealth away from you after you pass through probate, capital gains taxes, property taxes, and perhaps even a state-levied estate tax. All things I've talked about in multiple videos before, so you can check those out after this one. I'll link to one in the corner as well as down in the description. However, let's say you believe the White House. This bill will spark economic growth, markets will boom, and wealth will grow. Cool. But that also means your estate could quickly outgrow the exemption, especially when compounding is on your side. That's why many advisors, myself included, still recommend using irrevocable trusts now to shift appreciation out of your taxable estate. Think slats, spousal access trusts, dynasty trusts, whatever fits your strategy. These tools let you freeze value in your estate today and move future appreciation downstream. That's how you avoid building up a taxable estate you didn't plan for. Again, these are strategies for those who are likely to exceed the estate tax exemption rate, $15 million indexed to inflation, and would likely be overkill for those of us who aren't in danger of reaching that threshold anytime soon. Now, let's flip the scenario. What if the BBB doesn't deliver? What if the cuts to Medicaid and SNAP harm enough voters that the next swing brings in more progressive congressmen? Well, let's just say Senator Elizabeth Warren has her wealth tax playbook ready to go. And yes, senators like Bernie Sanders still want a more aggressive estate tax structure. If that happens, not only could the exemption drop again, there could be surtaxes on ultra-high net worth households, which some argue is like a wealth tax, or even new reporting rules on assets and trusts. So again, proactive estate planning today is a hedge against tomorrow's political climate. Quick sidebar, even beyond taxes, this bill reflects a country that's increasingly polarized. The legislative fight over the BBB was brutal to say the least, and I don't know about you, but I'm seeing more litigation, more hostility in probate fights, and more challenges to trustee decisions. That means asset protection needs to be built into your estate plan, especially if you have high-risk beneficiaries, blended families, or assets exposed to lawsuits or creditor claims. This isn't just about tax, it's about peace of mind. Additionally, keep in mind here that I'm not only talking to the super rich, but to us everyday folks who may not have multiple millions of dollars in investments or a bunch of real estate. However, most of us have family that we want to take care of. People we care about and want to ensure that someone else who cares about them will have the tools on hand to watch over that person once we can't do so anymore. I'm talking about special needs trusts, supplemental needs trusts, nested special needs trusts, holdback provisions, and the like. Tools any of us can utilize to protect loved ones from themselves as well as Uncle Sam's outstretched arms. But again, topic for another video and things I have discussed before. Now, let's talk about the environment this bill creates. The BBB introduces a maze of deductions, credits, and carve-outs that only apply in narrow circumstances. Tips, deductible up to $25,000, temporarily. Overtime pay, deductible up to $25,000, but only if you earn less than $300,000. Car loan interest, well, that can be deductible, but only if the car was assembled in the US, only through 2028, and only on loans under $10,000 of interest. Meanwhile, professionals like doctors and lawyers get excluded from key pass-through deductions, so yay. Teachers get to deduct unreimbursed expenses, but tax preparation fees, not deductible. Unless you're an educator, so go figure. All this leads to a core truth. Our tax code is now even more arbitrary and more complex. And that makes estate planning, especially with entities, trusts, and generational transfers, much more interdependent. You need to look at the big picture. Your income, your entity structure, your gifting strategy, your deduction plan, your trust provisions. They all connect now. Quick example. SALT deductions, state and local taxes being deducted against your federal taxes. The BBB raises the SALT cap to $40,000, but only temporarily, and phases it out above income $500,000 or more. That means if you're using a pass-through entity tax strategy to work around the SALT cap, you'll want to think twice before just abandoning that structure just because of the temporary lift. However, I do want to circle back to one key point. Yes, the exemption for estate and gift taxes is permanent, but let's be honest, no tax provision is ever truly permanent. The 2017 Tax Cuts and Jobs Act were also considered to be permanent, but there was a sunset saying we'll extend it later. Now we're revisiting them, extending them, but it is revisiting those tax provisions nonetheless, and there's nothing stopping a future Congress from revisiting them again. Congress can and will change course if deficits climb. Presumably. And with a national debt over $36 trillion, any future revenue gap could put wealth and estate taxation right back on the table. Bottom line, don't let today's high exemption lull you into inaction. So what does all this mean for you? If you've been waiting to use your estate tax exemption, the window's open, and we don't know for how long. If you're sitting on a business, investment property, or growing estate, consider shifting some appreciation out of your estate now. And if your family plan is built around today's tax code, it's time to revisit that plan with some fresh eyes. Remember, estate planning is not a one-time event, it's a process, and in a legislative environment this unstable, that process needs to be nimble. If you have questions about how the big beautiful bill impacts your estate, drop them in the comments, or reach out directly if you want to put a plan in place that can actually survive the next tax shakeup. Like the video, subscribe for more real talk on taxes, trusts, and as always, I'm attorney Andrew Bethel, and I'll see you at our next meeting.